Hello and welcome to Business Finance Made Simple. I'm Melissa Silber. I'm a CPA and I want to help entrepreneurs understand their business finances. I work with a lot of online sellers. A lot of businesses have gone online. Brick and mortar stores have slowly been shuttering closed over the last few years, before the pandemic even, but the pandemic gave it that push that kind of made online selling necessary. And so those who didn't already sell online, now selling online. Fortunately, what goes along with online selling is shipping costs. Shipping costs pretty unanimously are the bane of a lot of small business owners' existence at the moment. Gas prices are astronomical. Shipping companies are increasing their prices accordingly, and it's unfortunately a fact of life at the moment. And it can be a tough pill for some business owners to swallow, especially if their profitability was already shaky at best to begin with. One of the things that I try to stress whenever I'm talking to a business owner, we always do talk about sales and those top line sales numbers. Revenue is super important. If you don't have sales, you don't really have a business. So you do want to make sure that those sales numbers are good. What a lot of business owners focus on is sales. I think that in today's economic climate, profitability needs to be more top of mind. What do I mean by that? So you take your sales, your top line revenue number, and you subtract from it all the costs that you incur to make that revenue. Those would be your write-offs. I want to make sure that business owners are not just looking at the top line revenue. You have to take the revenue, less all your expenses, and that's where you get your profit. That is the amount that you're taxed off of. That's your taxable income. So you'll pay tax on that. And that is ultimately after tax what your business gets to keep as equity. That's what's left over. Businesses that are only focusing on sales numbers and aren't keeping a close eye on their actual profitability and their financial statements on a regular basis can find themselves unprofitable very quickly, especially as the cost of things like freight and raw materials, food, everything that goes into creating your revenue, whatever product or goods or services that you create for your customers, the cost of you providing that service is going up. A business that has $10 million in revenue can have $11 million in expenses. And yes, it's a $10 million revenue company, but that would put them in an unprofitable situation. That would be a loss. So they wouldn't actually have made any money that year. And as the cost of inputs is going up astronomically, it's so important right now to be constantly monitoring the cost of your inputs and making sure that you understand your profit per item so that you don't find yourself in trouble. If you're in the habit of only looking at your finances once per year at tax time, you miss the opportunity to do any sort of course correcting that needs to happen throughout the year as your year progresses. If you have sustained many price hikes in either your freight charges or some of your raw materials you purchase have gone up in price, and you aren't also taking a good look at your own pricing, you could be in for a rude awakening when you do file your taxes and your accountant has to compile all your numbers to find out that actually you weren't as profitable as you thought you were. Fortunately, you have to go along with inflation in these situations, and if your costs have increased, you have two options. You can either increase your prices accordingly to cover the increase in costs so that you do still maintain a profit margin, or you can get creative and start looking for other alternative sources of your inputs to combat shipping. A lot of small businesses are actually working with Amazon and starting to stock their products through Amazon so that they don't have to deal with the shipping themselves. So there are things you can do to mitigate the risk of becoming unprofitable. But if you're not looking at that profitability, it's hard to do anything to course correct. And if you find yourself at tax time realizing that you're not profitable and you need to hike up your prices, it's going to be a much larger hike than if you are just keeping an eye on it throughout the year and doing little hikes as you need to keep up with the rising cost of everything else in the world. And it's very unfortunate because you are technically helping to create more inflation, and the cost of your products for your customers is going to go up along with everything else. But you don't want only your costs to go up, because then you just lose your profits and your business may stop being profitable. When that happens, you need to be aware of it as quick as possible so that you can course correct, so that you can do the proper measures to get yourself back on track to making a profit. Because if there is no profit, your business will not survive. And this is a very scary reality for a lot of businesses now, especially if you're producing goods, not just because of those raw material increases, but the freight costs are just crazy right now. I do hope that oil and gas companies stop gouging people. I know that a lot of people blame politics and political leaders, whether that be in Canada or the States, on the rising gas prices, but it's not their fault. It's actually oil and gas companies that are gouging us, and there is not really any restriction on that for them to do, so they're just allowed to do it. It's going to hurt a lot of people in their pocketbooks. It's going to hurt a lot of businesses, but you have to do what you have to do as a business owner to maintain your profits. Another little aspect of this profitability discussion is not just your overall profits, but you want to know what your profitability is per product offering. If you produce a wide variety of items, you want to make sure that you're tracking your revenue for those items against the cost to produce those items separately, because you might find that some of your offerings are actually more profitable than others, and you might actually be losing money on some of your products and not others. Doesn't always mean that you have to increase your prices across the board. You might have to just increase prices of one item, or if you find that you're actually losing money on an item, you might want to drop it from your offerings. You don't want to be doing anything that's costing you more to do than you're bringing in, because that is unprofitable. It's a waste of your time because you're losing money. All of these things need to be looked at regularly. And this is how the large corporations have their market share. This is how they're able to maneuver all of these changes that happen, is have teams of accountants whose whole job are to focus on these costs and make sure that everything remains profitable as prices increase. And small businesses don't have the luxury of having a full-time accountant or a staff of accountants because it's too expensive, but the large businesses do. So they are able to pull out of things that aren't profitable, whereas the smaller businesses just kind of with your gut instinct. But I do believe that you can learn how to properly assess your financials. I have created a program for entrepreneurs for just this reason, to help them understand how their finances work. And I do perform cleanup services. If you've been in business for a while, you're making money, but you don't really have a good insight, profitability, and those type of management metrics, reach out and maybe I can work with you. If you're not in Canada, I know other people all over the world who could help you perhaps, but I do think it's so important, especially as we enter into this time of economic uncertainty, that we need to be not avoiding our finances, which is a gut reaction. In a lot of cases, it's just, I'm just going to bury my head in the sand over here and hope that everything fixes itself. And in reality, that could be the most detrimental thing that you do for your business. So not to scare you, but to scare you. You just want to make sure that small businesses can survive, because the cards have been stacked against you. And I want you to have the same chances as these big corporations to be successful and have profits. And thanks for listening to this episode on Profits First. I have some blog posts on this as well, so I'll link to those, and just stay diligent with those finances. And I hope to see you next time. Thanks for listening. Bye-bye.